another time to do business. Good morning, everyone. Welcome to 55 minutes of current and relevant business conversations here in Business Morning. I'm Amy John Mecca, and we start, as we would normally do, on the global space where oil prices rose after the United States President Donald Trump announced plans to impose shipping fees in the Strait of Hormuz and reinstate a blockade of Iranian ports. And that, of course, is raising concerns over potential disruptions to global supply. Mr. Trump said that the U.S. will levy fees on ships transiting the Strait of Hormuz, charging at the rate of 20% on all cargo that's shipped. Described the United States as the guardian of the vital oil transit route. In a post on Truth Social, Mr. Trump also announced that Washington would reinstate its blockade of Iranian ports near the strait, further escalating the conflict with Tehran. U.S. Central Command later said that the blockade would take effect at 4 p.m. today. And so all of that has fueled threats to supply, and that brings higher prices. So it's 2.56% up for Brent. We've gone more than about $10, I believe, from this time yesterday. We're now at $85.47 a barrel. WTI follows 2.50% up at $80.15 a barrel. And of course, the US and Israel, they launched strikes on Iran from the February 28th. And since that started, there's been a lot of uncertainty going on around the Strait of Hormuz, and roughly 1/5 of global oil supplies passed through the strait before the US and Israel launched that strike. And it all boils down, comes back to us here in Nigeria and every other country, because right now what we hear is Dangote Petroleum Refinery has fixed the ex-depot price of premium motor spirits, that's Petrol, at about 77 cents, almost 88 cents per liter, unveiling dollars. I mean, that is in dollar denomination, unveiling a pricing template that has raised benchmark prices for diesel and aviation fuel following its transition to dollar-denominated transactions. You heard that right. Well, this marks an end to Naira payment for the purchase of refined products, which started after October 1, 2024, commencement of the Naira for crude deal. The development also marks a major shift in the refinery's commercial operations and could reshape pricing dynamics in Nigeria's deregulated downstream petroleum sector, where Dangote has emerged as the country's largest supplier of refined petroleum products. The revised prices, which started yesterday, Monday, place automotive gas oil, that's diesel, at $1.87 per liter, aviation turbine kerosene at about 94 cents per liter, while coastal deliveries of petrol were fixed at $1.44 per metric ton. And of course, we'll try to get reactions to that later on the program. We see that Petroleum Price NG shared that with us. We'll hope to have the Chief Executive Officer join us on the program in a bit to help us explain what all of this means and what we can expect from that. Before we have him now, we'll have some news from the Ministry of Finance here in Nigeria. Hong Kong Special Administrative Region of the People's Republic of China. They've concluded a landmark agreement for the elimination of double taxation with respect to taxes on income and prevention of tax evasion and avoidance. This happened at a virtual signing ceremony yesterday. The agreement was signed on behalf of Nigeria by the Honorable Minister of Finance, Mr. Taiwo Yedele, and on behalf of the Hong Kong Special Administrative Region by Mr. Christopher Hui, Secretary for Financial Services and the Treasury. Speaking at the ceremony, the minister described the agreement as another significant milestone in the growing economic and commercial relationship between Nigeria and Hong Kong, and says a reflection of Nigeria's continued transparent, predictable, and investor-friendly tax environment that supports trade, investment, and sustainable economic growth. According to the minister, the agreement is designed to eliminate double taxation of income earned across both jurisdictions, prevent tax evasion and avoidance, and provide greater certainty for operating between Nigeria and Hong Kong. It says it forms part of Nigeria's broader strategy of expanding its network of tax treaties to support trade, attract investment, and strengthen international tax cooperation. And still coming from the Minister of Finance and Coordinating Minister of the Economy, we also saw, I think this is earlier today, that is asking for stronger regional collaboration to deepen tax administration reforms, improve compliance with ECOWAS tax directives, and strengthen domestic revenue mobilization across West Africa. The minister made this during a courtesy visit by a delegation from the West African Tax Administration Forum, WATAF, led by its Executive Secretary Jules Tapsora Sulio at the Federal Ministry of Finance headquarters in Abuja. Welcoming the delegate, the minister is commending WATAF for its notable progress since its establishment in 2011 and acknowledges the organization's contribution to building stronger and more resilient tax administration across the region. The meeting also explored opportunities for enhanced collaboration between the ministry and WATAF in advancing domestic revenue mobilization, regional tax harmonization, digital transformation, and capacity development across West Africa. Government says that it has granted more than 6 billion naira in tax waivers to 47 Nigerian pharmaceutical manufacturers under the Presidential Executive Order on Health Products. According to the Federal Ministry of Health and Social Welfare, the initiative is to boost local drug production and reduce the country's reliance on imported medicines. The government also disclosed that 115 pharmaceutical companies have been enrolled in the incentive program, with more firms expected to join as efforts to strengthen Nigeria's healthcare manufacturing sector continue. Electricity distribution companies have pushed back against a new directive by the Nigerian Electricity Regulatory Commission, that's the NERC, requiring them to create dedicated capital expenditure accounts. The discos say that the order gives the regulator undue control over how privately owned utilities manage their revenues and could discourage investment in the power sector. However, NERC insists that the policy is intended to boost infrastructure development, improve electricity service delivery, and strengthen financial discipline across the industry. Let's look at subnationals now. Fitch Ratings has affirmed Benue State's long-term foreign and local currency issuer default ratings, IDRS, at B, with a stable outlook following increased productivity and economic growth. The Group Managing Director of Benue Investment and Property Company Limited, Mr. Raymond Asamiaka, in a statement, commends the latest Fitch affirmation of Benue's credit rating by global rating agency Fitch Ratings, describing it as a testament to the prudent and visionary management of the state's economy under the leadership of the Governor Hyacinth Elia. Fitch Ratings, in its latest report of July 2026, affirmed Benue State's long-term issuer default rating at B and the national long-term rating from A- to A with a stable outlook. The agency cites improved fiscal performance, efficient debt servicing, economic diversification through strategic investment and aggressive industrial drive, as well as better management of federal allocation receivables and rising microeconomic activity that leads to inclusive governance as major contributors to the rating affirmations. These factors have driven the upward revision of its standalone credit profile to B from B. Fitch also cautions Benue's weak internally generated revenue, that's the IGR, which fell below 10% of the state's operating revenue. Let's head to the markets. Yesterday, we're back to the red. Profit taking is back at the NGX. The market was down yesterday, 0.84%, 241,749.11. Market cap at 155.129 trillion naira. Activity yesterday we saw were all green. Talking about the volume, value, and deals, they were green yesterday. While top gainers, NIDF, International Breweries, NACO, they were the top gainers. Top losers, BZ, Boa Cement, Red Starex, they were in the red yesterday. And top trader, FCMB International Breweries, as well as Access. Well, we saw the market begin in the red yesterday and closed in the red, unfortunately. Now, we've been talking about waste in Lagos. I guess the government has heard this, and there are some efforts to turn waste to energy, which we've been expecting. Well, it's part of effort to reduce the volume of waste that end up at the landfill site. The Lagos State government and its partners, they provided a biogas plant in Ikosi Fruit Market in Lagos, the K2 area, to convert organic waste into clean energy as well as fertilizer. Our correspondent, Titilayo Berowo, tells us more about this project.
A biodigester plant situated in K2 Ikosi area of Lagos State, launched in February this year through a public-private partnership, is already serving its purpose for conversion of generated organic waste into energy. An official of the Lagos State Waste Management Authority collects fruit waste from the markets, brings it into the biodigester facility where pineapple and watermelon is being processed to supply electricity and cooking gas for traders within the markets. The first step is the cutting of the fruit waste, which goes into the grinding machine for shredding, and the weight of the liquid content is checked before going into the mixing tank. The biogas plant manager explained the process of the fruit waste energy.
Presently, we make use of the pineapple and the watermelon. The first thing we do is that we wash it. The reason why we only wash it is that if there's any particles we don't really need, unwanted particles, so we need to wash them off. So after the shredding, we weigh it. After weighing it, we put it into the holding tank. There is a process we call anaerobic digestion. Once it goes through that process, that is when it's going to come out in a maintained form.
The initiative under the Climate Action Program translates into practical developments that benefit community and tackle effects of climate change in Lagos State.
It's a multifaceted program. It tackles the effect of climate change, where before now you have all the foods being generated there, the waste being generated there, being dumped at the dump site. Now with this program, the waste is being turned into something beneficial to the market people here. It's more of what you call a circular economy.
Next is the digester chamber, where the breakdown of the organic waste produces biogas and biofertilizer.
Substrate comes into the digester, and immediately it enters the digester, anaerobic digestion starts. So immediately we start loading, gas is being produced instantly. This is how the system looks like. You can see this pump here. There are pumps at every digester to mix the substrates in the digester to ensure even distribution of heat and microorganisms.
Managers of the biogas plant says 29 solar electrification panel has been installed within the markets to make movement a lot easier at night.
This is done by the help of the biogas generator, which lights up the market through the solar panel system that has been installed.
Some of those taking advantage of the clean energy, including this food vendor, fruit sellers, as well as this man involved in phone charging business, they are all grateful to government for the initiative.
Since we started taking advantage of the free gas, we now spend less amount of money in refilling our cylinder, and it's very good. It makes our work fast.
Initially, I spent between 15 to 20,000 naira daily to buy fuel for my generator. But since the launch of the biogas plant, I have no reason to purchase fuel anymore.
Gas
So guys, the don't seem by other pay me.
People are really benefiting from this because it's a very thoughtful idea. It's helping and it's even helping with the economic of the market.
The Kosibao digester plant represents a bold step in reimagining waste, not as a burden, but as a valuable resource that can drive sustainability, resilience, and inclusive growth in Lagos State. Titilayo Abereowo, Channels Television News.
One of the stories that gladden our hearts here in Nigeria when we see promise made and promise kept. I know that is just minute when we compare to the expectation of Lagosians following the promises of turning waste to electricity, but at least we can celebrate that and thank the Lagos State government and say that we're expecting more. I guess to whom much is given, much is expected. Now let's go back to that story about the pricing of petroleum products now in dollars by Dangote, and we have joining us to help us understand all of this, the Chief Executive Officer of PetroleumPrice.ng, Mr. Jeremiah Latide. Mr. Latide, good morning. Welcome to the program. So please tell us, help us to understand. We know that Dangote has been importing crude because Nigeria has not been able to give it enough feedstock. But is that the reason for this, or are there other reasonings for it?
Okay, I'm going to go back to memory lane. In the month of March 2025, Dangote refinery suspended Naira sales through the gantry and through the coastal. This is not the first time we're experiencing this. It happened last month, and they cited the refusal of Naira for crude agreement with the federal government. And in less than 10 days, the federal government came out with a statement that the Naira for crude agreement has been reinstated. So I'm very sure the reason why Dangote came up, according to market intelligence that we got, the reason why they came up with, or they introduced the dollar for PMS, AGU, and ATK, excluding LPG, is basically because they get more heat from NMPCL in dollars, and it creates a whole lot of backlog and imbalance to the refinery. So I'm looking forward to an alignment. If you look at what happened last month, according to the reports of Dangote Refinery, of about 21 vessels that was received by the refinery, 20 of them came from the NMPCL. So it shows that about 90% of the crude feedstock to Dangote Refinery in the month of June came from NMPCL. And I'm very sure there is a mismatch between the Naira for crude arrangement. But I'm also saying that that particular contract needs a whole lot of transparency. Experts like us need to know what makes up that contract. How many quantity is being given to Dangote in Naira? What other quantity is given to Dangote in dollar? So we could be able to evaluate and know why is Dangote Refinery coming up with this particular dollar initiative. Because if you look at our downstream sector is very, very fragile. For every policy that is initiated, if not properly regulated, the middlemen and the marketers could take advantage of it, inflicting Nigerians with more pain. In the last 2 months, Nigerians have had to buy quite a very high price at the pump for PMS, AGU, and even LPG. So including a dollar transaction into the gantry sales will inflict more pain. So I hope the federal government understands that the economy is fragile, the downstream sector is fragile. A whole lot of intervention is needed this particular period of time. But for me, the Naira for Crude initiative is not enough. 80% of Nigerians live in hardship poverty. Buying 1,200, 1,300 for petrol at the pump is quite outrageous. Buying 1,600, 1,700 for diesel at the pump is quite outrageous. So I think we need a thorough intervention. I don't want to use the word subsidy, but we need a thorough intervention.
So from your perspective now, it looks like Dangote is trying to tell consumers that the crude for Naira contract has not been met, and I'm having to import more, and this is one way for me to, close the gap for my operating costs. Is that what you're saying?
Yes, that is the market intelligence we got. What we got from our intelligence is that in the last few cargoes they received, they've gotten more cargoes in dollars than in naira. And selling to Nigerians or to marketers in naira, we create a whole lot of imbalance. So I think the federal government should do something as quick as possible, because if something is not done immediately, some middlemen will pest on this and take advantage of this. And you start seeing hike at the gantry, other depots, and also at the pump.
So doing it in pricing the products in dollars now, when we have a stable naira, can it necessarily translate to higher pump price, or would marketers or retailers just convert it to the price, to the naira conversion, and then stay on the price?
Okay, I said earlier that our downstream sector is quite fragile. We are not regulating appropriately. The regulators are trying, but they need to do more. Because of the regulatory glitch, some middlemen will take advantage of this development and possibly hike price at the depot, even at the gantry, because Dangote is definitely going to sell to selected people. Okay, now let me take an example. Jet fuel used to be priced in dollar, and because of that formality or that formation, the margin that those marketers were making were quite very high. As at 3 months ago, before Dangote decentralized the jet fuel market, the difference per liter is as high as 300. They were buying 1,800 at the gantry. If converted to naira, they were selling 2,300 at the gantry, at the Dangote refinery, because of the dollarization of the transaction. So it creates room for a whole lot of manipulation. So until Dangote decentralized the market, make sure that the market is open. The market is open to all. The very few people that were given access to jet fuel were increased. And as soon as they achieved that, it created room. And the price of jet fuel dropped instantly. The Dangote came out with a publication of their daily gantry price for ATK, and immediately prices started dropping. And I speak with you, at the gantry, Dangote is selling 1,300 for jet fuel, while the marketers are selling 1,310. That is minimal compared to the 300 naira margin that was placed on it. So what Dangote is trying to create is a bureaucratic process where some very few will take advantage of what is happening and make a margin as high as 100 naira or 200 naira per liter, if care is not taken. So for us, I think the federal government needs to step in. We know that energy is the bedrock of every economy. They need to step in today and say, okay, what is really happening? What challenges are you having? If the life of crude contract has expired and it needs to be renewed, I am calling on them to renew with immediate effect. If not, if that decision is not taken at the moment, prices might rise at the gantry and at the pump because we have a very fragile system. The NNDPRA are doing their best, but they are not regulating enough to be able to say, oh, you are making abnormal profits. The FCCPC are trying, but they are not doing enough because of the regulatory glitch. And our economy, the downstream sector is just thriving, is growing. So federal government, at this point, needs to intervene.
All right, we certainly do hope we'll see that intervention soon because, I mean, we're just about to celebrate that at least we have petrol at the pump at less than 1,100 because of the relief from the Strait of Hormuz, even though that has come back and then now we're hearing this. But thank you so much for helping us to understand the backstory of this morning, Mr. Jeremiah Latide, Chief Executive Officer, PetroleumPrice.ng. Thank you for your time.
Thank you so much. It's a pleasure having you. And today is my birthday. I was supposed to tell you that.
Oh, happy birthday to you.
Thank you so much. Thank you so much. It's a pleasure. Thank you.
All right. Well, I guess we'll go somewhere and have cake later on today. But happy birthday to Mr. Latide and graciously sharing his day with us on the program. We're still talking about the prices and commodities. We're expecting inflation for the month of June, and FDC expects a slight increase or slight decrease for the month of June. We're going to have the Assistant Vice President of Financial Derivatives Company joining us to tell us why they expect it and what could drive this slight decline that they're expecting for the month of June, because we do know that most of the month of June we had high prices of global oil, and that of course trickles down. We just talked about Dangote now, what's happening to prices at the pump for diesel, for petrol, and of course that is what feeds into inflation, energy costs, and then it goes down to transportation and all of that. So we're going to have Dr. Ifeoma Nwokolo, Assistant Vice President, Financial Derivatives Company, to share with us the expectation for inflation for the month of June. Dr. Nwokolo, good morning. Welcome to the program.
Good morning, Amy. Thank you for having me.
Good to have you. So FDC expects a slight decline in inflation that we're expecting in a couple of days. Why is that?
Yeah, that's our expectation, and I don't think if that comes out true, Nigeria will not be an outlier. If you look at in the month of June, we saw a significant drop in the price of Brent. We had as high as $126, and in the month of June, that was when we had an interim ceasefire between Iran and US, and we saw that the price of Brent dropped massively. There was a sharp decline to about $70 per barrel. That was in the month of June. We saw prices hovering between $70 per barrel and $75 per barrel in the month of June. So we saw that this has trickled down in the prices of commodities, coupled with the fact that we have a weaker consumer demand, and also smuggles of commodity from all neighboring countries to Nigeria brought prices down in the month of June. But basically, what we saw was that the price of Brent came down, which also had like a spillover effect on price of PMS in the month of June. We saw prices decline by Dangote brought down prices by over 200 naira in the month of June. So that is why we are seeing, and I've taken my time to look at June inflation for several countries, and you see that countries that have published their June inflation, though very little, very few number of them has a marginal increase, but a whole lot of them has a decline in inflation rate. If you look at the euro area, it declined from 32 3.2% to 2.8%. So we're talking about Germany, Italy, France, they all recorded decline. Kenya too has released their June inflation and we have a decline from 6.7% to 6.4%. So we are also expecting a marginal decline in inflation from 15.93 to 15.88 based on these assumptions and what we saw in the markets.
And how do we see this reflecting in the price of commodities?
In the month of June, we saw prices of commodity, some remained relatively flat and then some declined. And some commodities declined if you look at the commodity slide. If you look at the month of June, so what we are displaying here is commodities for the month of July. But commodities for the month of June, we saw prices taper. And we also saw that logistic costs also taper because the price of PMS dropped from about 1,300 and something that it was to about 1,100 and something, if I'm not mistaken. So that sharp decline in the price of PMS filtered into the price of commodity in the month of June. So what we are displaying now are commodity prices for the month of July. So that is why we are projecting that we are going to see a decline, marginal decline in the price of in inflation rates in the month of June.
Yeah, so talking about presently, what's driving the cost or price of commodities?
Can you come again?
I'm asking what's driving the price of commodities now?
Yeah, what is actually driving the price of commodity right now is one, we have prices as a kind of reverse upward because of what we are currently seeing. We are seeing that global oil price has reversed itself, and that has brought about an increase, of course, in price. We bring about an increase in prices of PMS in no due time from now. And prices of commodities that we are seeing right now is becoming high because another factor is the Naira. We are seeing that the Naira has reversed itself and we are seeing a depreciation in Naira in a couple of days. And what does that mean? It means that importation costs have become relatively high. So what we are seeing is imported inflation. So in the month of July, we might see a reversal, even though we'll see a decline in inflation rate in June, our expectation. So in July, we may see inflation reverse itself upward again, following what we are seeing around us, a lot of uncertainties and imponderables that we are seeing around us in the month of July again, due to the Strait of Hormuz is recently going through a major global risk, and the two, coupled with the 20% fee that Trump is proposing on every cargo that goes through that particular route. So, and the market has already factored in that, and we are seeing that global oil price has increased. And in few days from now, even though we are seeing that prices are stable, we may see prices reverse back. So we should expect prices to reverse upwards, and you know what that means. Once prices reverse upwards, inflation is going to definitely reverse itself in the month of July. So that's the expectation for the month of July.
All right, thank you so much, Dr. Ifeoma Nwokolo, the Assistant Vice President of Financial Derivatives Company. Thank you for your time.
Thank you for having me, Amy.
All right, let's take a break. When we come back, factoring, it's a way of funding small businesses, at least in the interim. We'll get to know about that and perhaps what some money is there for small businesses. Please stay with us. Welcome back to watching Business Morning here on Channels Television. And before we head Into our next conversation for our DSTV viewers, we have to lead you to Yola State, where the governor there, Governor Fintiri, is commissioning the Yola market. That will be for our DSTV viewers. For our other viewers, please stay right here with us. And if you're on YouTube and you still want to watch Business Morning, just jump to the next channel and then we'll be right there. So now we're talking factoring. We've seen that the Senate has passed the Factoring Assignment and Receivables Financing Bill. And that's supposed to open doors for Nigerian micro, small and medium enterprises to tap into a continental debt factoring market that's worth over $50 billion, from which the country currently captures less than 1%. I don't know if that's a very popular or common term to you right there if you're watching the program, but let's get to understand what this factoring is about and what is funding that's available. And we're doing that this morning with the co-founder and CGO, that's the Chief Growth Officer of Vendor Credit, Mr. Olusheye Seiton joins us virtually. Mr. Seiton, good morning. Welcome to the program.
Good morning. Happy to be here.
Good to have you. So please help us to understand. I don't think it's a very popular term when you talk about factoring, the funding and all of that. What's this about?
Well, so in simple terms, factoring is a financial model or transaction which permits a supplier, right, that has receivables due from a buyer to sell those receivables to a third party called a factor. So in simple terms, the audiences that might not understand what we're talking about, let's assume I am a vendor to channels and I'm supplying you diesel. Typically the terms of the agreement is that once I supply you the diesel, you could pay me 30, 60 days, depending on what we agree on. So for now, SMEs have very limited options as to what they could do with those receivables. Most of them choose to wait the 30 or 60 days before they can access funding, which means that any opportunities that come within that window, they could not explore them. So what factoring allows you to do is to take that invoice, that receivable that is due from, say, Channels TV, for example, to a third-party agent called a factor, right? Or a factoring house, or a factoring organization, to exchange that invoice or those receivables for immediate cash. Of course, at a discount.
Yeah, because I wanted to ask at what cost? Because everything obviously has a cost. And how do you authenticate? Because let's not lose sight of abuse. There needs to be a structure that gives authentication and parameters, for who or what kind of business or what kind of corporates or companies can be involved in this.
So the bill is open to pretty much all corporates. The good thing about it is it's a marketplace opportunity that is being created. So what that means is at the end of the day, it's a willing buyer, the willing seller would meet a willing buyer. So what would come to play would now be a conversation around what kind of corporate is it, what's their antecedents, how strong are they financially. All those things will now come into play when determining what the pricing or what the discount factor, right, that will be applied to the invoice value would be. For verification, the way it is right now is structured such that, as a factor agency, you write to the corporates to notify them, to validate and also notify them of the transfer of those receivables to you, right, which is buying those receivables. So the verification obviously has to be from source, which in this case would be directly from the corporates themselves.
And this bill by the Senate, what does it do? Because in this value chain, I don't hear you mention a government or regulation. So where does this bill, where does it fit in?
Well, so what the bill is doing is it's creating the legal framework, right, to enable these activities to occur. So if you're looking at other countries on the continent, for instance, if you're looking at, say, South Africa, which does over 80% of the factoring that happens, in Africa as it is, Egypt, Morocco, which come second and third, and in that particular order. People have been able to unlock billions of dollars in factoring. So I think what the bill is the first step. I suspect that what would happen is, as they implement some of these things, we'll see revisions and amendments and supplementary bills come to support the activity that's going on in that place. But overall, I think it's a win for small businesses. What it does is it allows them to have more of a variety of options in which they can access capital from, as against just the loans and the stringent terms in which they have to deal with the existing options that they have in front of them.
So, I mean, as a factoring company, I don't know if that's what it's called, you need to, of course, maybe be registered as a company, CAC, and all of that. But does anybody just wake up and say, yes, I can stand in and be a factoring company, so a small business, because it's more like a loan, yes? It's not a loan.
It's not. It's an actual purchase, pretty much.
Okay, because I'm how I understand it, a small business, for instance, supplies some things to channels, and then before the period when channels pays the small business, it goes to the factoring company to get the fund, yes?
Correct.
At a cost.
Correct.
Okay. Now, we have loan companies these days. We know how FCCPC has been trying to protect consumers. We've seen the sometimes awful ways which these loan apps and loan companies try to get their money back. So I'm wondering, what kind of protection can we have around that?
Well, so I think what I've read basically points to the fact that some of those regulations, particularly when we are going to raise capital from the public space to be able to fund these transactions, right? You need to get SEC approval for you to be able to act in that particular way.
You need to get SEC approval?
Yes, that's if you're going to the open markets, right? To go and raise retail investment funds to be able to fund, some of these transactions that the factoring transactions that are coming on. What I suspect as well is, if you're looking at existing laws, right? The CBN has factoring as has oversight over finance houses which have factoring as one of the products that have been approved by the CBN for them to offer, right? So the chances are, I suspect that they're going to push licensing of any factoring house, right, to either run through the CBN or probably SEC, two of them, but I see more of the CBN. They're the ones that already have those products in place for people. I think that's on one side. I think that's one thing that probably would be, that also still needs to be clarified as we go further in implementing this factoring bill.
So it's obviously a very fresh market that still needs a lot of enlightenment and structuring. Of course, when we hear that there's $50 billion on the continent through this factoring avenue or platform, then we really want to try and use it. But thank you so much for helping us to understand how this factoring could work. Co-founder and Chief Growth Officer of Vendor Credit, Mr. Lucia Satan.
Thank you very much, Ini. Enjoy the rest of your day.
You too. Let's take a break now. When we come back, we'll go global. Please stay with us.
Let's check out what's happening in the global economy now. We see Australia's consumers, they're showing fresh signs of optimism after months of economic uncertainty. A new survey reveals confidence improved in July, easing fuel prices and reduced fears of further interest rate hikes. That lifted, household sentiment. But despite the rebound, Australians remain deeply cautious, with consumer confidence still hovering near some of the weakest levels recorded in the survey's 50-year history. The latest figures highlight a fragile recovery as families continue to grapple with high living costs and an uncertain global economic outlook. And moving on to other parts of Asia now. South Korea's currency is on a winning streak, climbing to its strongest level in 2 months, as investors anticipate a wave of US dollar inflows linked to SK Hynix American depository receipts. The won briefly surged 0.7% to 1,486 against the dollar, making it Asia's best performing currency. That's today. The move underscores growing foreign investor appetite for South Korean assets and highlights how major corporate transactions can ripple through currency markets, offering a boost to one of the region's most closely watched currencies. And Japan's electricity prices are surging as a powerful heat wave and mounting fuel supply concerns that's putting pressure on the country's energy market. Spot power prices have jumped to a 6-week high after soaring temperatures in Tokyo. That drove up air conditioning demand, while renewed disruptions to shipping, that's through the Strait of Hormuz, that pushed natural gas costs higher. A day ahead, electricity prices climbed 64% in just 1 week, highlighting how extreme weather and geopolitical tensions are combining to raise energy costs for businesses and households alike. And China's export engine is showing no signs of slowing. The country's trade surplus widened sharply in June after both exports and imports comfortably beat expectations, driven by booming global demand for AI-related semiconductors, computing equipment, and electric vehicles. The stronger than expected trade figures underscore the resilience of China's manufacturing sector, even as policymakers continue to grapple with weak domestic demand and a prolonged property downturn. The latest data could also reignite trade tensions as China's export momentum is gathering pace. To metals now, gold is rebounding strongly as investors weigh rising geopolitical tensions against the prospects of higher U.S. interest rates. While renewed conflict in the Middle East has boosted demand for safe haven assets, hawkish comments from Federal Reserve Governor Christopher Waller have strengthened expectations that borrowing costs could remain higher for longer, limiting the bullion's appeal. Investors are now turning their attention to key U.S. inflation data, with the latest Consumer Price Index report expected to provide fresh clues on the Federal Reserve's next policy move and the direction of gold prices. And Norwegian Air is facing fresh turbulence after reporting a bigger than expected second quarter loss, sending its shares lower in early trading. The budget carrier posted an operating loss of 603 million Norwegian crowns, missing analysts' forecasts as higher fuel costs, emissions-related charges, and calendar effects weighed on earnings. The disappointing results underscore the growing cost pressures confronting Europe's airline industry, even as demand for air travel remains resilient during the peak summer season. And to currency markets now, they're trading cautiously as investors brace for a key U.S. inflation data that could shape the Federal Reserve's next policy move. The Japanese yen steadied amid growing speculation that Tokyo could step into the market to support the currency if weakness persists, while most Asian currencies traded in tight ranges. Meanwhile, the U.S. dollar held firm as traders awaited fresh inflation figures and further comments from Federal Reserve Governor Christopher Waller, with both expected to provide crucial clues on the outlook for interest rates. And we did hear from Christopher Waller actually yesterday. All right, that's what's happening in the global economy. Definitely will give you more updates later on. I'll see myself there. I'll see.
Well, thank you so much, Ladi. And just before we leave the program, see what's going on in the market. This morning, we see a bit of recovery, even though the market is somewhat flat in early trade, but we see more greens, more cherry picking than profit taking. First Coal is recording green, 2.44%. MTN Nigeria is also green. International Breweries is green. Access Holding is still in the red at 24.70 kobo. We see even Geregu is not in the red this morning. I say congratulations to investors there. Total Nigeria red, Nestle Nigeria red. Presco has also lost 10% already. Fresh numbers will come your way at 1:30 when Ladi Williams comes back during Business Incorporated. I'm Ini John McCrow, wishing you the best of the rest of the day.